Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my medium time frame bullish scenario, where we're looking for a flat structure in a running flat ABC with a zigzag in wave A, zigzag B, and eventually a 5-wave move to the downside in a wave C, where the low of wave C did not take the low of wave A, therefore it's a running flat, which is the least common flat pattern, as an expanding is most common. Then you have the regular flat and then the running flat, but in this bullish scenario, this is your low and you're going to be looking for a move towards the upside. Now, if that is the low, there are two scenarios that have potential over here. The first is an expanding diagonal. This is very rare though. So here we have wave 1, 2, 3, 4, 5. 3 is longer than 1, 5 is longer than 3. That is exactly what you like to see. Now, after wave 1, we're then looking for a 3-wave structure to the downside in a wave 2, most commonly hitting the 0.5 to the 786, sitting between 27.4k and 25.9k, and preferably this high over here is not going to be reached for your wave 2 to the downside, as the most common pattern for a wave 2 is a zigzag 5-3-5. If price, however, continues to the upside and takes this high, then a potential double 1-2 over here is the bullish scenario, where you have a wave 1-2, 1-2 looking for continuation. Now, in this scenario, what is a little bit awkward is that the lower degree count, being the blue count, as the blue count is a subdegree of wave 3, so we have 1, 2, 3, 4, 5 in green, and then inside wave 3 we have the blue count 1, 2, 3, 4, 5. Over here the blue wave 1 is longer in price than the green wave 1, so the lower degree 1 higher or bigger than the higher degree wave 1. And the second wave 2, the blue wave 2, is longer in time and price compared to the higher degree wave 2. So it's not ideal, but yeah, it can happen. Bullish CVD divergences, at least that's what we got between the lows, higher low in price, lower low on the CVD, bullish CVD divergences, which have played out, but that could support this scenario where you do have a double 1-2 setup. And especially if price is going to take this high, the double 1-2 scenario gains in probabilities. If we then look at the bearish scenario, then over here we're looking for a zigzag on the 12-hour time frame towards the downside. So in this scenario, we have then a 5-3-5-wave structure to the downside, and based on the current high of wave B, the most common target of wave C is between the 1 and the 1.236, between 23.4k and 21.9k. Now, in this particular scenario, that means that more locally, we're then looking for a 3-wave structure. And if we look at a 3-wave structure, then a WXY over here is then on the cards, where preferably also this is your high. So you don't really want to see this high being taken if you're bearish. In this scenario, we then have a flat BX zigzag to the upside in a wave Y, where the most common target for wave C in the zigzag, taken from the low to the high to the low, is between the 1 and the 1.236, as you can see. And now, preferably in this particular scenario, you're then looking for a move towards the downside. And as you just saw also in the higher time frame bearish scenario, you're currently grinding again against the golden pocket, taken from the high to the low, which always is an important area of resistance. So the moment you can clear the golden pocket with the 6.6 over here sitting at 29.67k, and you take this high, probabilities really increase for a double 1-2 scenario and much more upside to come. If we then zoom into the lower time frame structures, then here we have the bearish scenario, where in this scenario we're then looking for a wave 1, wave 2, and then you want to see a wave 3 towards the downside. Now, in this scenario, common targets for wave 2, golden pocket 786, are left, as you can see, and price just hit the single print, which is basically the top of this candle over here. It's an order flow term, I suppose, but just hit the single print as a little bit of resistance, as you can see. However, we are at the same time finding support at the golden pocket, building some bullish divergences here as well on the lower time frames, which you can see if you go to the 3-minute AGGR chart. You can see over here higher low, but look at yellow and blue, by the way, lower low, also in blue, lower low. So higher lows on price, lower lows on the CVD. These bullish divergences have now played out as price took this high over here. But of course, that can be supportive of continuation locally to at least take this high over here. But the bullish divergences for now played out as this little high has been taken. And in this particular scenario, of course, you're going to be looking for a move to the downside. Now, what is not so nice and also mentioned in the stream yesterday is this wave 1 over here. This wave 1 is on the 15-minute, basically one candle. And then you have this massive wave 2 over here, which is low probabilities that really happens in a 1-2. It was much better if this wave 1 would have been a nice structure towards the downside, taking more time to form than just one candle, because of course we have a big wick here as well if we go up in the time frames, and wicks do tend to get filled, but it lowers the probabilities for this particular scenario. And if price takes this high, probabilities really increase for the more bullish scenarios. Now, if we look at the subdegree of wave 2, if we are looking for this bearish scenario, we of course need to have a 3-wave structure in order for price to then move to the downside impulsively once again. So what you see over here is an ABC 535 zigzag structure. So we have a wave A, 3-wave structure in a wave B, before then a wave C towards the upside, where the most common target area for C is between the 1 and the 1.236. As you can see, that is where we are at the moment. Now, in this particular scenario, you then like to see price turning around and move back towards the downside. But however, if we look at this wave C over here, we need to be able to count a 5-wave move. Bit difficult. This is quite a big range compared to any other structure. So this has to be your wave 4 in the wave C. Likely this has then to be your wave 2, and then a 1, 2, 3, then you have 4, and then a wave 5 to the upside. The thing with the wave 5 at the moment though is that volume is increasing as price is moving up. And yes, a wave C can have the highest amount of volume in the top of the candle, but preferably in an impulsive structure, your wave 5, if this is a 1, 2, 3, 4, 5, your wave 5 has lower volume. Now, because wave Cs can end on high volume in the top of a move, the 0.5 and the 618 here are very important, taken from the low to the high. If price falls towards the downside and hit the 0.5, there's no problem. But the moment it hits the golden pocket, that is the moment where probabilities will increase that a temporary high is in, and we might be going towards the downside, because the 618 over here is not a wave 4 target. So in this scenario, if you're looking for continuation to the upside, you don't really want to see price moving to the 618s too often. Preferably it bounces on the 382 or the 05 and keeps continuing to the upside. So the moment the 618 is hit, that's the moment where we have to think twice and be like, there might be some probabilities increasing for this being a wave C and then a move towards the downside. Of course, in the most bullish scenario, also more locally, which is this scenario over here, you want to see continuation, where this is your wave 1, sideways, double combo, in a wave 2, zigzag, flat, for then continuation to the upside in a wave 3, where this is the beginning of your wave 3 to the upside, where very typically price is moving more parabolic and impulsively to the upside with volume increasing. And at the moment, that is something that we do see. So we definitely have to take this particular scenario in account. Now, in this scenario, also preferably, you just like to see continuation and not too many drops. Of course, there's always the potential for another 1-2 continuation, but of course we have to wait and see if price hits the 618, how it does so. Is it a big straight line to the downside? Well, then it's not a double 1-2, but if we find support with maybe more bullish CVDs, well, there is the potential. But generally, you don't really like to see the 0.618 being hit in the bullish scenario. In this particular scenario though, you can see that wave 2 ended at the golden pocket, taken from the news low basically to this wave 1 high. Gotta say, like Elliott waves, it's not been forming very nicely. If you look at this wave 1 over here, you can get a 5-wave structure in here with a 1, 2, 3, 4, 5, which then becomes a very big expanding diagonal on the lower time frame. And expanding structures in general are quite rare in Elliott waves, so that is not too nice. But in this scenario, this is the way to count it, where then you have the nice flat in wave Y as well. Now, if we go to the bullish/bearish scenario, because you still expect more downside here, Basically this little bit of like the same with the ABC and then a move down, but it's counted differently. But I do want to talk about this, as this has been a scenario we've been covering. Over here we then have a 3-wave structure, so not an expanding diagonal 5-waver, but a 3-wave in W. This is the same corrective structure, WXY, for then inside the yellow wave X and then a wave Y. And this is important because a wave Y is not allowed in the sideways double combo to be the same structure as wave W. If W, likely here, is a zigzag, then wave Y has to be a flat or a triangle. Well, triangle in my opinion doesn't really work, so then a flat is left. The only way to get a flat is if this is your A over here, then this is your B, and this is your wave C to the upside. And you can see that the wave C is incredibly long compared to your very, very, very small wave A and very even smaller wave B. And yeah, it's even higher than the or the 3618 trend-based fib extension, which is incredibly rare for a wave C, really lowering the probabilities of this scenario. If I move the end of the yellow X to the right, then the problem is that we have another potential 3-wave structure over here and then an ABC, but because W is labeled a zigzag, wave Y cannot be a zigzag, which then also lowers the probabilities of this particular scenario. So at the moment, the bearish scenarios don't look too great on the in this range over here with the 1-2, especially the length of your wave 2 over here. In this particular scenario, this is quite a weird wave C, of course, if you want a 5-wave structure. So we really got to see if it drops enough. Volume highest in the peak, potential continuation to the upside. Now, if you then look at the confluences, I mentioned the single prints. That's where we are now, finding some resistance, might be a bit of a range. Of course, the weekend is coming up as well, but I'm curious where we're going to range in the weekend. And what is important is also what happened over here. Now, in the live stream yesterday, I went in quite a little bit of detail on what I was looking for over here to increase probabilities to take this high. And there's a few posts that I actually like to show in the updates section. So over here, just to get you give you an idea of what I was looking for after the 1 p.m. video. So we in the 1 p.m. video yesterday, Central European time, shared some scenarios, all nice, all good. But then this happened. Retest of the point of control locally. It looks like it might want to take the high at least once more. Breaking the POC would give confidence. So over here, price was moving towards the upside, taking the point of control, coming back, retesting the point of control, while above we had the order block. And because of what we saw locally, the probabilities increased to take the little high locally. Took the high, moving above the order block, and I can imagine it will take the local high. Now, eventually, I also mentioned from an Elliott Wave point of view, this move isn't a nice double zigzag anymore as it took the high. Would have been nicer to not take it. So that increases also the probabilities for the continuation. And then eventually also, something you may have noticed but didn't mention in the video, is that the double 1-2 setup is not a diagonal shape, but that's a setup that was relevant for that scenario in a potential 1-2, 1-2 move down. Lower probabilities as wave 1 did not take the low of this wave 1 over here. So that is basically how, the moment we crossed the order block, that is the moment where I was like, yeah, probabilities really increased to take the high. We took the point of control as well. Yeah, we came back, but eventually look at where we are right now. If we look at the CVD divergences, then very, very locally, as mentioned, we do have some CVD divergences over here, but these already played out. But as you can see, again, price coming down, potentially here, more bullish CVDs forming. So that is quite interesting. So if we then look at the probabilities, then yeah, at the moment, more locally, we are at resistance. So you really want to get rid of this single print resistance. You want to close candles above this resistance, very important. But if we look at the different scenarios from an Elliott Wave point of view, then, well, the bearish scenarios don't look too amazing here. Wave 2 is incredibly long compared to your wave 1, not impossible. But if we look at the ABC, you're looking for a 5-3-5 wave structure where the 5 waves in wave C are quite difficult to really determine over here. So most important for me is eye on the invalidations. If price moves to the downside, hits the 618, then the probabilities increase. This was a temporary high, and we can be looking potentially for the double bottom at 28K over here. If we look at this particular scenario, well, as mentioned, zigzag not allowed, flat looks a bit weird as well, because then this again is a very big wave C, but it doesn't count nicely like a 5-wave structure. So that is interesting, and of course volume increasing as well. So the bullish scenario does have higher probabilities, also with the bullish CVDs building over here. We got to keep open, got to be neutral for everything else, of course. And on the higher time frames, well, at the moment, the higher time frames, you know, a running flat it's not nice. The double 1-2 isn't great, but in the end, the local price action decides. From an Elliott Wave point of view, a running flat is a very, very rare corrective structure, which is something you do not see often at all, and also expanding diagonal is rare. Double 1-2, where wave 1 and 2 are longer in time and price, aren't that nice as well. But in the end, if locally you don't really see proper structures forming for downside, well, then also on the medium and the high, low time frame, the higher time frames, things increase for continuation. So let's be patient, see what happens here at resistance. If you clear it and take this high, probabilities really increase for continuation. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.